Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of February the 19th, 2018. Now, to get started this week, guys, we're going to begin where we always do with that all-important US dollar index, but some exciting news here. We're starting this week's presentation with the new VP10. Very excited about that. We've got some additional indicators here coming through with the VantagePoint software. One of the ones I'm really excited about here is the predicted MACD with the MACD trigger, predicted difference trigger, I should say. So very exciting. The program's got updated neural networks, some great new features. So let's get going on this. With our dollar index right now for next week, our critical level is coming in on the VantagePoint key level 89.30. Now 89.30 is that dark colored blue line, the 18-day predicted moving average, followed by our 8-day predicted moving average at 89.30, and our 3-day, of course, coming in at or about the 88.97 mark. Now we've closed at 89.01. The indicators from VantagePoint here are quite mixed on this dollar sell-off. So when we look at this a little bit closer, our predicted differences are turning negative, but when we look at our predicted MACD and our predicted MACD difference trigger, we're not crossing over on that predicted MACD and we're holding above the zero line, where our predicted RSI is starting to turn higher. This has caused gold to move lower. We can see that gold has had a big sell-off based on that dollar, just a little bit of a dollar rally on Friday, has turned around and sent gold lower. It has also sent oil a little bit lower, but oil has done a little bit better than some of the other ones. But the intermarket correlation there is that if the dollar is up, basically the S&P 500 is down, gold is down, oil is down. That intermarket correlation very important. So when we look at the S&P, we've got a very identifiable range here, guys. We're up here around this 28.70 mark, the lower end of that, 25.30. Now, I'm not at all convinced that this equity market is just a correction and we're going to go blowing through this 2900 mark. I'm not convinced of that in the least. One of the things I'll notice is the last time we had a 10% correction in the equity markets, that corrective move of 10% took 64 days. This 10% drop took all of 8 trading days. That is a very, very violent move in my respectful opinion, and could be indicative of a bigger move that's coming to the downside. So I'm not saying that that's what's going to happen. I'm just simply showing the volatility, the VIX going through the roof, doubling in the same day its value. These are the kind of things we have to watch very closely for. So the equity markets, if they're moving lower, the US dollar is moving higher. Keep that in mind. Same as gold, guys. Same deal. If the US dollar rallies in the least, even in just a little bit, it's going to push it higher. So some of the things that I'll point out too is we've got the seminar coming up in April. Very excited about that in-person seminar on April the 7th in Tampa. So make sure you contact VantagePoint about that, because it's very important. And any further questions about the material here or the seminar, you can also email me at etradefx@gmail.com or visit me on my website at etradefx.ca. So when we look at our main currency, guys, the dollar's still under a little bit of pressure, but it's not a confirmed trend reversal at this particular time that we are just going to go lower. So the euro, you can see the euro, much like gold, has had a significant failure. When we look at the gold chart and the euro chart, they're almost identical. 1370 is the top part of gold, and we can see that the euro unable to clear 25.50. So 125.50 is a key level. We must break through that. But for the most part, we are range trading here, guys. Now, we are officially range trading unless we can break through. Again, in my respectful opinion, break free and clear of 126 on the top side. That would likely take gold towards 1400. Then we've got a clear run here. But right now, we don't have actual confirmation of that. When we look at the predicted MACD and the new predicted MACD difference, they're both failing to cross the zero line and the trigger. So it's these kind of indicators we want to look for. If we look at the predicted RSI, we are losing momentum here, guys. This is clear as day. We are not holding above that 60 level. We've slipped back in here to 58.1. that's technically bearish here, guys. It means we've lost our upside momentum. This could be, a quadruple top potentially a quadruple top at 125.50. That is entirely possible. But what we can assess here is that anytime we move towards that level, the sellers step in. So we're looking for buyers to come into U.S. Swiss franc. Right now, we're recovering to some degree. The one indicator, once again, I'm going to draw everybody's a little bit more attention to this one this week, is that new predicted MACD indicator, which I find quite interesting. The zero line on the predicted difference, we're holding above that. And again, US Swiss franc is not crossing that trigger to the downside, suggesting that the dollar could actually recover here, guys. It's possible. Anything's possible. But it just seems like even good news is bad news for the US dollar these days. And maybe it's because of Trump. Maybe it's because of the irrational behavior of the Democrats. Who knows? It's impossible to say. But now, what's caused this most recent bout of dollar weakness was the, adding $1 trillion to the deficit. And Democrats invented deficit spending. So I don't know what the issue there is. But, now they're all worried about this. So it's difficult. It's very difficult to say from a political standpoint, but there are political jitters here. So we can't dismiss that. We have to keep that in mind. So for now, that key level right now is 93.30, 93.75 on the downside that we're trying to target with the euro. The key vantage point level, 123.32. It does look like we're getting ready to move back to that. Now, as we look at the British pound for next week, not as many political jitters on this particular pair, but it still is buying or selling US dollars. So the downside, 139.78, we're coming back and testing, and you can see how we have failed into this upper trend line. The lower trend line area, 137.50. The only way we can get down here, guys, is if we break through the key vantage point levels at 139.78, 140.17, and of course 139.55, that key vantage point 18-day predicted moving average. So with a close of the week at 140.27, we're still holding above that 18-day predicted moving average. But again, it is struggling. This pair is struggling to maintain a bullish bias. Our neural index is still up. But once again, the predicted RSI, we're failing at that 60 level. And our predicted MACD difference, which is this gold colored line, I'll just take this off so you guys can see this a little clearer. I'm looking for this gold line to break above the zero line and a crossover on the predicted MACD to get this thing moving. But that just isn't happening yet. So when we look at our short-term crossover with VantagePoint, we can see the green area is good for the upside. The medium term starts to shrink though, which potentially could be an issue. And our long-term crossover, you can see here, is still red inside of here. The long-term crossover has not completed. So there's a lot of activity. This area around 139.81 is going to be a very significant level if it can hold 139.81, 139.51. So keep an eye on those levels that I've identified. But again, I'm not sure that the dollar is just going to continue to sell off and the equity markets are going to continue to advance higher. Which brings me to the dollar-yen pair. The dollar-yen pair, this thing is hit so far, it's actually running into my neural index down here. So it's nothing seems to save this pair. And this pair classically up until more recently is basically equities up, dollar-yen up. But right now, Japan and China are settling their own trade balances with each other now. They are bypassing the US dollar, and that is showing somebody is buying Japanese yen in very large quantities. And the only people that I can think of that are doing that is China. So dollar yen is its own animal right now, guys. Be very cautious with this particular pair. We've continued to move lower, and there just doesn't seem to be a bottom. The indicators from VantagePoint still pointing lower. The 18-day predicted moving average now all the way up at 108.63. I would be expecting a retracement, but hopefully, that is sooner rather than later. But right now, still a very bearish bias in place here. Now, when we look at the US-Canadian pair, US Canada has had a very choppy week. With my own direct guys, we've maintained long on this side, buying on dips. That 18-day 125.03, but we've put a bottom in. We've got buyers coming in around 124.50. The VantagePoint indicators, once again, you can see we can even stretch our charts here. Very cool program, the way we can move things around with the different indicators. But we're starting to bottom out here on the predicted differences. The predicted MACD trigger, you can see the predicted differences. They're advancing yet again. The predicted RSI 49.1, it's trying to recover. Now we've got a lot of Canadian data coming out next week. Keep an eye out on that. But for now, there's still a very slight bullish bias. Now that we've managed to fight our way and close all the way up at 125.28, above the 18-day and the 8-day predicted moving average, but just barely. So we'll see how this one plays out. But if we look at it on a short-term basis, it has been bearish. On the medium-term basis, though, it's virtually neutral, and on the long-term crossover, it's still bullish. And we even managed to close just above that VantagePoint critical level at 125.35. We're closing 125.49, so not a bad move there. Held off the simple moving average, but the close above this blue line is the one that has my attention. Now, when we come in and look at our final two commodity currencies, Aussie US and New Zealand US, these two are desperately trying to make a recovery, but you can see that after we've advanced higher, Friday we've had a big sell-off. Now, the indicators, once again from VantagePoint, the predicted differences are rising, but our predicted MACD, when we look at it a little bit closer here, and our predicted RSI, the predicted RSI 49.8, it's actually turning somewhat bearish, and we do not have a crossover on the predicted MACD to the upside, and our MACD predicted difference is holding below the zero line, still actually carrying a bearish tone here. So in order for Aussie US and New Zealand US to advance higher, we need gold moving past 1370. At this particular time, I'm not convinced that my optimism, I should say, on this remains heavily guarded. Now, when we look at New Zealand US, very similar deal here. You can see how I can pull that out of my VP10 very easily. And again, when we bring up our key VantagePoint level, 73.05, we are closing 73.86. So of the two commodity, or of the three commodity currencies, New Zealand is clearly the strongest of the group. But even this pair is losing momentum, in my respectful opinion. So when we look a little closer at this, you can see that the predicted MACD is pretty much flat. The predicted difference sitting right at just slightly above the zero line. There could be a long trade there. Predicted RSI 64. So the New Zealand, if I'm going to buy any of these commodity currencies, this would probably be the better one. But the commodity currencies could come under pressure next week across the board. But remember too that we have a holiday on Monday in the US. I believe it's President's Day for you guys. So thin markets. So limit your trading till Tuesday, Wednesday of next week, and let the market settle. So with that said, this is the Forex Weekly Outlook for the week of February the 19th, 2018.